I'm already a six-figure funded trader, and in this video, I want to walk you through how I'm planning to scale to $1 million in funding. This is the exact way I approach prop firms, whether it's on the forex side or CFD side, and the same logic applies to futures as well. So you can take these principles and adapt them to your own trading. Now, before we can even talk about prop firms or scaling capital, this whole plan really comes down to two phases. Phase one is actually knowing about your trading metrics. It's actually knowing about your numbers, and this is the foundation. So this is a very important part of the plan, and I would not recommend skipping this step, right? So before I scale anything, I need to know my data. I need to be clear on my win rate. I need to know my average risk to reward. I also need to know how many trades I'm taking per day, per week, in a month. And I also need to know my risk rules. And that needs to be followed regardless of what kind of day I'm having. Now, typically, there's two ways to go about this. One is through your real trades, right? So journaling properly, pulling the data from what you've actually executed, understanding your average, win rate, your risk to reward, what kind of trades you've been taking, the time window or the sessions you do really well in. That all needs to be extracted out of this. Now, I'll give you just an example. These are basically the 3 trades that I've taken this week so far on forex, 2 on EU, 1 on GU. And they played out really well. Now, the reason I'm showing you this is actually understanding the type of trades that you've taken, whether it's a buy or a sell on whatever asset you trade, is actually going to help you lay out a plan, lay out a roadmap to get to max allocation or even $500,000, 1 million, whatever the target that you've set for yourself. To get to that point, you need to know the information I've spoken about. Now, that's one way to go about this. The second way is, if let's say you've been slacking on journaling, and you've not actually got proper data to understand where you stand within trading and what your system is basically, then the other way is through backtesting, where you can understand how your model behaves over a large sample, right? But either way, if you don't know your metrics, you don't really have a plan. So you're just going to end up guessing, it's basically a hit or a miss. And a lot of traders only look at win rate and risk to reward, but another important thing that is very, very important is actually the trade frequency. Those 3 things, right, your win rate, your risk to reward, and your trade frequency, they go hand in hand. And this is actually what defines your edge. Now, using this, later on in this video, I will talk about my personal metrics as well, because I've literally extracted out the information that I've been journaling the past few years, and especially last year, and that's going to help me actually figure out a plan that I'm going to stick to get to 1 million in funding. Right, so that's phase one. That's actually laying down the foundation, understand how you've been performing, and then acting on it so you can actually carry that forward. Now we're going to talk about phase 2, which is basically execution and account management. Actually, the plan, the roadmap exactly to get to 1 million in funding. Now, once the metrics are clear, then comes the execution and account management part, right, which is basically phase 2. This is where I explain how I'm actually going to scale to 1 million in funding in a way that's realistic, it's controlled, and it doesn't become, overwhelming or turn into a full-time admin job. So you're literally copy-pasting whatever you've been doing that's been working in a more controlled environment, right? When I was writing down the plan, the first thing that came to my head was the efficiency part, right? I want to make sure that this whole process isn't, either too fast, that I'm over-risking, over-trading, trying to get to 1 million funding really quick, or, it's either too slow, where I'm actually stuck in the evaluation phase for too long. So the efficiency part is really, really important. And I want to make sure that it is done in a way where I'm not feeling overwhelmed and it's a bit realistic, like without actually stressing myself, I can achieve that goal, right? So I'm not going to trade $1 million worth of accounts one by one, right? That doesn't make sense and it's not scalable. Instead, what I've done is I've broken that 1 million into 5 chunks, right? So you have $1 million, which is divided into 5 chunks, all adds up to 1 million, right? Now, each chunk is basically 200K, right? I only focus on one 200K block at a time. And once that is funded, then move on to the next one. So inside of each 200K block, I'll have multiple accounts adding up to 200K. At the moment, I've got 350Ks and 225Ks that is actually adding up to 200K, and that's one chunk that I'm going to trade. Once it's funded and I've passed it, then only I'm going to move on to the next chunk. Now, this obviously diversifies the risk. Now, let's say for whatever reason I wasn't able to pass the accounts. What that does is I'm not at risk of actually losing the whole $1 million if I'm trying to pass it in one go, right? That means all together. So dividing them into stages actually eliminates being overwhelmed or overstressed about getting them to the funded stage, right? Another important thing to mention is that I'll have multiple accounts adding up to 200K, but I'll manage them together using a trade copier. That way, I place one trade and it's copied across the group instead of me managing everything separately. So these 5 accounts, how I'm going to trade them is through a trade copier. So I'm going to have a master account, and whatever trades I put in there, whether I buy or sell, I'm going to get copied across the rest of the 4. This way, it's not too fast and it's not too slow, so the process seems like a bit seamless and a bit better for psychology, and also to get to that 1 million funding as well. All of these accounts are still in phase 1 of the prop firm process. None of them have been passed, none have them failed, and they're fresh challenges, right? Hopefully by the time I'm posting this video, I've taken some trades on it, some good trades. But so far, they're fresh accounts, and we'll take it from there, right? So from there, once they're passed, once they're funded, all I do is repeat the process in a set of 5 until 1 million is hit. And just to say this quickly, if you're listening to this and realizing you don't know how to go about trading a prop firm or which one to go for, I've got a video on my channel where I break down in detail how to choose the right prop firm and how to trade them and get funded. There's a video that's worth watching before you even think about scaling. So go on my channel and go have a quick look at this one and come back. Because this video is more about laying out the roadmap to getting 1 million in funding. So I'm not going to go in depth on my strategy here. The goal really here is to help you understand the structure and the process. If you do want to understand the technical side of how I trade, entries, execution, and what I'm actually looking for on the charts, you can book a one-on-one call with me using the link in the description below. Right, now this was more to understand how many accounts I will have and how I'm going to go about trading them. Let's move on to a bit more technical stuff, right? So actually the instruments, the sessions, and the trade quality. Now the information that I'm going to actually reveal here is the data that I've collected over time, obviously through journaling my trades, through understanding what kind of trades I've taken, and summed it up so I understand completely and I know exactly how I'm going to go about trading the accounts to get to 1 million in funding, right? Now let's go one by one. So for me, I know I'm working with roughly a 55% win rate, right? Around an average risk to reward of 1 to 3. And this is something I've actually integrated into my plan for 2026 as well. I'm only going to stick to 1 to 3s. I think 1 to 3s with 1% risk is amazing. It can get you, real good profits. So sticking with that, knowing that I don't want to sit in front of the charts for hours as well, I'm going to go with 1 to 3 risk to reward. Now the trade frequency is 2 trades per day maximum, and that is if, let's say, I've taken a winning trade, my first trade is a winning trade, I'm not going to trade the rest of the day, I'm not going to utilize the second bullet. If, however, my first trade was a losing one and I see a really good solid opportunity popping up, and then I'm going to utilize my second bullet of the day. Now, the instruments that I'm going to be trading is Euro USD and GBP USD. That's on forex, and on CFDs, I'm going to be trading NAS and S&P. They behave very similarly. EU and GU, those are correlated pairs. So is NAS and S&P, and it keeps the execution part very, very simple, right? Now the sessions I'm going to be focusing on is London Open and New York session. That's the sessions I've been trading for quite some time, and I think get a lot of good solid setups forming within these sessions. My most profitable window is basically London session. So out of all the trades that I've taken, London session is the one that gives me really high probability setups that actually turn out to be winners as well. And New York session, however, I've seen that in comparison to London can give me some more losing trades. And that is why you need data to back it up. Where you can actually, which session you can rely more on to get you a winning trade. Now, setup and framework, right? Most of my setups are basically based on clean liquidity sweeps, inducements, right? Control retracements, and steady directional move. What I mean by that is either I'm going to be trading the pullbacks or I'm going to be trading the expansion phase. I don't care about the trend, and the trend is not my friend. Now, whatever the market is giving me, I'm going to be, reacting to that and not predicting. So it becomes a smooth trading session. Now, the best trading days from what I've had so far has been on Wednesday, Thursday, and Friday. That's not to say that I won't be trading Monday, Tuesday. Absolutely will do. But from whatever wins I've taken so far, Wednesday, Thursday, and Friday give me really solid setups, right? So focus intensity, you can say that it increases towards mid to late week for high quality setups. But again, the plan for Monday and Tuesday is exactly the same that I'm going to follow on Wednesday, Thursday, and Friday. Right, so this was the instrument sessions and trade quality. This data is actually extracted from my journal and whatever I've seen so far, and we're going to just copy paste it onto the accounts that we're going to trade. Now, the next thing I'm going to talk about is basically the risk framework and how I'm going to execute it, right? So basically 1% per trade during scaling and structure execution. So basically I'm going to be risking 1% per trade of whatever capital I'm trading, and this is sort of percentage that actually I'm very comfortable in taking. I have built myself to take 1%. At the start of my trading journey, I wasn't taking 1%. It was more between 0.5 and 0.8, and then last year is when I pushed myself and started risking 1% per trade. And I think it's working out pretty well for me, so I'm gonna stick to that. Right, and now I'm not gonna increase the risk to force passes. So I'm not going to be like, I'm going to risk 1.5 or 2% to have an aggressive approach to pass accounts. Absolutely not. I'm going to stick to the plan that actually I'm going to replicate when I'm funded as well. So keeping it steady, smooth, and just, copy pasting whatever's working on eval onto the funded stage, right? Now the risk stays constant regardless of the account size. That's really good because when I'm copying my trades using Trade Copier, I've made sure that the risk stays constant in relation to the capital. So if I'm risking 1%, let's say at this point I've got 350Ks, so 1% on that would be $500, whereas on 25Ks it would be $250, and that risk actually adjusts itself on the trade copier, so I don't have to actually put in a different lot size to get that sorted. So that stays actually constant throughout, right? And it's important to understand that I'm actually trading these accounts the same way I trade a normal account. So no hero trades, no changing rules just because it's a prop firm. The goal here is basically to build consistency and just repeat that process, right? Because what happens is a lot of traders that I speak to already understand the concept, right? They understand liquidity, they understand structure, they understand risk as well. But what they struggle with is execution and consistency. That's exactly what I focus on inside my one-to-one mentorship. We work on how you think, how you execute, how you manage your risk, so you're not blowing accounts or second-guessing every trade. It's not signals, it's not a shortcut, it's a program for people who want to treat trading like a skill, not a gamble. If that sounds like what you need, there's the application link below in the description. Alright, now let's talk about risk tolerance. Now, alongside execution rules, there is another big piece of this plan, and that is basically risk tolerance. Now, when I talk about risk tolerance, I'm not talking about the risk per trade. I'm talking about how much I am okay to lose during the evaluation phase, right? So for me, the number that I'm comfortable losing is basically between $500 and $1,000. That basically matches the cost of, buying the prop firm challenges. So this is the amount I'm comfortable allocating towards evaluation phases over a certain period of time. Now, here's an important detail that I want you to remember. This money that I'm investing into buying these accounts isn't actually coming out of my own pocket. It's coming from the previous payouts that I've already had. So for you to jump into the prop firm world and expect to scale right away, I think that wouldn't be a very smart move. You need to, pass an account, get a payout, and then, you scale it from there. Okay, so I'm just recycling my profits back into scaling. What that basically does is that alone removes a lot of pressure, right? This also lines up with my trading frequency. So I'm actually ready for the worst case scenario as well, because what happens? Worst case scenario, multiple accounts fail and I lose, entire $500 to $1,000, because that is something that is a reality of the market, reality of trading prop firm accounts as well. I've had accounts in the past that I've lost, right? And that can very easily happen. One bad day, I could be in a mindset. I could be in a sort of a mindset that is not good for trading, and that could actually replicate in the trades that I take. So that is all part of it. But even if, let's say, I lose the account, right? The damage is controlled. It's, I am expecting the worst case scenario as well. I'm ready for it. I've planned for it. So there's no panic. There's no revenge trading, no forcing trades, because I've already accepted the downside before I even place the first trade. That's really the key point here. I know the worst case outcome and I'm fine with it, right? As long as your risk tolerance matches how often you trade, how you execute, and the capital you're working with, you stay calm, objective, and disciplined even when things don't go your way, right? So that is actually knowing what amount you're willing to lose if things don't go your way, right? Now, the important question is why the structure works, right? The whole structure lets me scale capital without scaling stress. It keeps risk controlled, drawdowns manageable, and the psychology in check, which is a very, very important part of your trading. As capital grows, right, I can rotate exposure, group accounts differently, and adjust my execution path, right, without changing the underlying strategy. There are no fixed timelines here, right? So I'm not giving myself that in the next 1 month I need to pass all these accounts, move on to the second chunk of 200K. Absolutely not, right? I'm not forcing anything, and I'm going to take it as it comes and see it from there. So there's no fixed timelines here, right? I review performance, I adjust based on the data, make decisions based on numbers and not emotions. Because at the end of the day, the goal is simple: build 1 million in funded capital using a repeatable, controlled process, and then keep scaling from there. I hope this video helped you. And if you're at a stage to scale up, I hope you take a similar roadmap and get yourself to whatever capital, whatever target that you set for yourself. And that's it for today. I'll see you in the next one.